Hello everyone, welcome back to the Intelligent Investor channel. In this video, I'm going to give you an updated Apple stock analysis. Specifically, I'm going to talk about why I think Apple's upcoming mixed reality headset, Apple Vision Pro, will likely succeed as the next computing platform after the iPhone. Also, I will show you how to calculate Apple's intrinsic value so you will know when Apple stock becomes undervalued, fairly valued, or overvalued. As you may already know, Apple stock has been one of the best performing stocks for many years already. For example, in the past 1 year, Apple stock has already recovered and it has outperformed the S&P 500 by a large margin. In the past 5 years, you can see Apple stock has also outperformed the S&P 500 by a large margin. In fact, the S&P 500 is currently driven by the largest mega-cap tech stocks, including Apple, Microsoft, Alphabet, Amazon, Meta, Tesla, and Nvidia. Going forward, Apple's upcoming mixed reality headset, Apple Vision Pro, will be a very important product. This is because Apple's mixed reality headset is expected to be the next computing product after the iPhone. When it comes to mixed reality, which includes both augmented reality AR and virtual reality VR, Apple's strategy is very different from Meta's strategy. Meta's upcoming Meta Quest 3 headset is still mainly focused on VR gaming experiences and of course the metaverse, and it's much less focused on augmented reality experiences. In comparison, Apple's upcoming Apple Vision Pro is much more focused on augmented reality experiences such as watching movies in a mixed reality environment and using the same familiar iOS apps. At least for now, Apple Vision Pro is not focused on VR gaming. So in this video, I'm going to talk about these topics to see if Apple's Vision Pro will succeed as the next computing platform. Will Apple's Vision Pro succeed? Apple's biggest competitive advantage, Apple's long-term growth prospects, Apple stock valuation, and will I buy Apple stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock reviews and investing videos every week that will help you become a great investor. Each video usually takes me 20 to 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help our members grow their stock portfolios to over 7 figures over time. Once you become a Patreon member, you can follow all the stocks I'm investing in for the long term and download the latest intrinsic value calculators for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. As of now, Apple's strategy in mixed reality is very different from Meta's strategy. First of all, the biggest difference is pricing. Apple's upcoming Apple Vision Pro's price will cost $3,499. In comparison, Meta Quest 3 is starting at $499. This means the Apple Vision Pro will be 7 times as expensive as the Meta Quest 3. Obviously, the Apple Vision Pro is targeting very different audiences compared to the Meta Quest 3. Apple's upcoming mixed reality headset is too expensive for most consumers to buy. Apple Vision Pro is meant for early adopters who have the extra money to buy it. It's also meant for developers who want to start testing it and start making apps for it. Similar to the first iPhone or the first Apple Watch, the Apple Vision Pro is a first-gen product that's meant for early adopters. It's not a mass consumer product yet until the price is much cheaper. This is my prediction here. I think Apple will need to bring its mixed reality headset and eventually its AR glasses to less than $1,000 for it to become a mass consumer product similar to the iPhone, iPad, and Apple Watch. According to rumors, Apple is expected to release a cheaper version of its mixed reality headset in 2024 or 2025. If I have to guess, I think it will take Apple several years to make its mixed reality headset much cheaper for mass consumers. After the mixed reality headset and when the technology is ready, I believe Apple will eventually release its AR glasses that will be much lighter, smaller, and more importantly, much more affordable for most consumers to buy. In my opinion, Apple's mixed reality headset is not going to affect Apple's revenue growth and earnings anytime soon until the product is much cheaper for the mass consumers. Apple's approach to mixed reality is very different from Meta's approach. For example, the upcoming Meta Quest 3 is still mainly for VR gaming, VR sports, and VR interaction with other people in a metaverse environment. Similar to the Apple Vision Pro, you can still watch movies and browse the web in a virtual environment. The Meta Quest 3 is also much more mobile and much cheaper than the Apple Vision Pro. Of course, Apple Vision Pro has much better specs than the Meta Quest 3. Both devices are serving different customers and have very different purposes. Overall, I think the Meta Quest 3 is still much more focused on VR experiences, and it's not meant for augmented reality experiences yet. In comparison, Apple Vision Pro is much more focused on augmented reality experiences. Apple calls it spatial computing. In my opinion, I think Apple's approach to mixed reality is much better than Meta's approach. This is because Apple wants users to be more grounded in the physical environment while using the Apple Vision headset. For example, users will be able to use very familiar iOS apps that will appear in front of them in their physical environment. Users can watch movies in a semi-virtual environment or a 100% virtual environment. Users can connect to their Macs and make multiple virtual screens. Other than all the very high-end specs such as the M2 chip, R1 chip, and 4K plus micro OLED display for HI in the Apple Vision Pro, I think the biggest breakthrough is this. Instead of using a traditional controller, Apple Vision Pro uses voice commands, eye tracking, and finger movements to control apps. In my opinion, I think using eye tracking to interact with apps is the biggest breakthrough here. Other than the $3,500 pricing, the downside is that Apple's mixed reality headset will not be a good device for VR gaming because it does not have physical controllers yet. I want to show you these financials here. I think this shows that Apple's approach to mixed reality is likely much better than Meta's approach. Here, you can see Meta's Reality Labs or the Metaverse business has been losing a lot of money for many quarters already. In fact, in the most recent Q1 quarter here, you can see Reality Labs revenue decrease year over year. This means fewer people bought Meta Quest headsets compared to a year ago. Meta already has a mass consumer product called the Meta Quest that's affordable for most consumers, but the business is still not profitable yet. I think the biggest reason is that VR headset is still a very niche market. The Meta Quest is still mainly focused on VR experiences, VR gaming, and VR sports instead of mixed reality or AR experiences. In comparison, Apple's mixed reality headset is much more focused on mixed reality and AR experiences. I think this is a much bigger market in the long run. Once Apple's mixed reality headset becomes much cheaper and more affordable, let's say reducing the price from $3,500 to $1,000, I believe Apple can sell a lot more headsets than Meta. According to this article here, Apple's Vision Pro's biggest advantage is not so much the hardware and the specs, but the biggest advantage is Apple's developer ecosystem or Apple's large number of developers already making iOS apps. While some competitors like the Meta Quest have key apps like Microsoft Office, Xbox, and Netflix, offerings beyond these are limited. In the several years that Meta's headset has been out, the Meta Quest store has only released about 400 games and apps. That isn't necessarily a bad thing, but it's a sign that there's a serious lack of content optimized for VR. Unlike other headset ecosystems, though, Apple is promising hundreds of thousands of apps on day one, a feat it's able to pull off thanks to work on other platforms. Apple will automatically convert iPad and iPhone apps to a single scalable 2D window that works on the Apple Vision Pro with no work required from developers unless they want to make any changes. And for the developers who want to create something new for the headset, Apple is making it easy for those already acquainted with its ecosystem to create apps for Vision OS, its new mixed reality operating system. Based on what I know, Meta Quest already has more than 1,000 apps, but Apple is planning to have hundreds of thousands of iOS apps already available on day one. At the time of making this video, Apple already has more than 1.7 million apps on its App Store. Naturally, I think many iOS developers will want to be the first to start making apps for Apple's mixed reality headset. So this is a huge competitive advantage for Apple that cannot be easily copied by competitors. This is why I think Apple's mixed reality headset will likely succeed as the next computing platform, much more likely than the Meta Quest headset. Apple's biggest competitive advantage is this. It is Apple's ecosystem, also known as the walled garden. Apple controls the hardware, software, and all the related services such as the App Store, iMessage, FaceTime, Apple Wallet, and iCloud. So all these products and services can work much better together, and they are very easy to use. Once you're used to using the iPhone, iPad, App Store, and other Apple products and services, you're stuck in Apple's walled garden ecosystem because it would be very hard for you to switch to another ecosystem, such as the Android ecosystem. In my opinion, it's almost impossible for other competitors to copy Apple's walled garden ecosystem. The only viable alternative is the Android ecosystem and Samsung's high-end smartphones, but they're not well integrated like Apple's ecosystem. This is why Morningstar also gave Apple a wide economic moat. We assign a Y economic moat rating for Apple that stems from the combination of switching costs, intangible assets, and network effects associated with its iOS ecosystem. Combined with an asset-light business model, we think it's nearly certain that Apple will generate excess returns on capital over the next decade and more likely than not over the next 20 years. We think the firm's primary moat source stems from high customer switching costs based on a variety of aspects of Apple's hardware, software, and services. First, we think about the risk of customers moving away from today's electronic devices such as smartphones. We view the smartphone as the most essential computing device for users, and despite innovations in other types of electronic devices like smart speakers, AR/VR headsets, and the Internet of Things, we don't see the smartphone going away anytime soon. The smartphone has already replaced a host of standalone electronic devices, standalone cameras, MP3 players, portable game consoles, and so on, while emerging as the primary portal with an intuitive interface for many other digital devices, email, books, web browsing, shopping, social media, videos, and more, in a pocket-sized form factor. Apple's iPhone fostered the industry, has maintained its position as the premier smartphone, and we expect the firm to increasingly monetize its valuable installed base with the iPhone as the catalyst. I want to show you Apple's most recent financials and long-term prospects here. Here, you can see Apple still makes the most revenue from iPhone, followed by services, wearables, Mac, and iPad. In the short term, Apple's mixed reality headset will be a very niche product for early adopters and developers because the product is too expensive for most consumers. Apple will likely include Apple Vision Pro sales in this wearable segment here. This means we will not know how many mixed reality headsets Apple sells every quarter until Apple's mixed reality headset becomes a major product category like Mac and iPad. Going forward, I think Apple's mixed reality headset will eventually become a major product category once it becomes affordable enough for mass consumers. I said this earlier, I believe Apple's mixed reality headset will have a much larger chance of succeeding as the next computing platform than the Meta Quest headset. This is because Apple has a very large and loyal iOS user base, with over 1.74 billion iPhone users in the world at the time making this video. Similar to the iPhone and Apple Watch when they were first launched, I think a very small percentage of iOS users are willing to be early adopters to buy Apple's mixed reality headset even if it's very expensive. Also, Apple has many more developers making iOS apps compared to developers making apps for Meta Quest. According to Apple, Vision Pro can run many existing iOS apps at launch, so this is a huge competitive advantage for Apple. I want to show you Apple's past financials here before showing you Apple's expected growth rates going forward. In the past 10 years, you can see Apple had very consistent revenue growth in most years. Apple also had very consistent operating income growth, diluted earnings per share growth, and free cash flow growth in most years in the past 10 years. Apple wants to achieve net cash neutral over time. This means Apple will continue to return excess cash to shareholders through dividends and share buybacks every quarter. Apple will issue more debt so its total cash is balanced by its total debts in most quarters. In the most recent quarter here, Apple had 166 billion of cash and marketable securities. In comparison, Apple had 110 billion in short-term and long-term debts. This is still a very strong balance sheet because Apple can pay off all its debts and still have around 56 billion of cash left. Also, Apple intends to maintain its cash at a neutral position, so its total cash and marketable securities will be about the same as its total debts. This means Apple will likely buy back more shares, pay more dividends, and issue more debts going forward in order to maintain a net cash neutral position. In terms of revenue estimates, Apple's total revenue is expected to decrease slightly in 2023. Then Apple's total revenue is expected to grow between 6% and 9% each year over the next several years here. I believe these growth rates assume that Apple's mixed reality headset is not a mass consumer product yet, since Apple's upcoming mixed reality headset is too expensive for most consumers. Apple is much bigger than before. Its revenue base is also much bigger than before. Realistically, Apple's revenue should grow at single-digit rates in most years instead of double-digit rates going forward. In terms of EPS estimates, Wall Street analysts also expect that Apple's EPS will drop slightly in 2023. Then Apple's EPS is expected to grow faster than its revenue growth in the upcoming years. This is because Apple is expected to use its excess cash to buy back more shares each year, which will increase Apple's earnings per share. I also want to show you this comparison here. At the time of making this video, Apple has the highest market cap compared to other mega cap tech companies such as Microsoft, Alphabet, Nvidia, Tesla, and Meta. In terms of profitability, you can see Apple is still the most profitable business in almost every category, such as return on equity, return on assets, and return on total capital. Only Microsoft has a higher operating margin and EBITDA margin than Apple. I want to show you how to calculate Apple's stock's intrinsic value here, so you will know when Apple stock becomes undervalued, fairly valued, or overvalued. If you want this calculator, you can download it from my Patreon blog. The link is in the video description. These are the key assumptions in this calculator. First, I define Apple's intrinsic value as its future free cash flows discounted to the present day. I used a discount rate of 11% here. You can use a higher discount rate here if you want to be more conservative. I expect Apple's free cash flow margin should be around 25% over the next 5 years. This is consistent with Apple's past 5 years free cash flow margin. Based on the revenue forecast I showed you earlier, I believe Apple's revenue should drop slightly in 2023 because of all the macroeconomic headwinds such as high inflation and high interest rates that are affecting consumer spending. Then I expect Apple's revenue should grow between 6% and 8% each year over the next several years. Let's go over these 3 case scenarios here: worst case, normal case, and best case scenarios. Under the worst case scenario, we're forecasting Apple's revenue will drop around 2% in 2023. Then we're forecasting Apple's revenue will grow at a compound annual growth rate, CAGR of 6% over the next several years. If we forecast Apple's free cash flow over the next 5 years and discount the free cash flow to the present day, Apple's intrinsic value should be around $2.1 trillion for the entire company, or $135 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're forecasting Apple's revenue will drop around 1% in 2023. Then we're forecasting Apple's revenue will grow at a compound annual growth rate, CAGR of 7% over the next several years. Then Apple's intrinsic value should be around $2.2 trillion for the entire company, or $141 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're forecasting Apple's revenue will stay flat in 2023. Then we're forecasting Apple's revenue will grow at a compound annual growth rate, CAGR of 8% over the next several years. Then Apple's intrinsic value should be around $2.3 trillion for the entire company, or $147 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Apple's intrinsic value should be around $141 per share. I also used the forward price to sales valuation model here to estimate Apple's intrinsic value, which should be around $2.6 trillion for the entire company, or $166 per share. If we take the average of both valuations here, Apple's intrinsic value should be around $153 per share. Just to compare, Morningstar estimated Apple's intrinsic value to be around $150 per share. This means I believe Apple stock is likely overvalued at the time making this video. So will I buy Apple stock? Personally, I like Apple's wide economic moat, its walled garden ecosystem that is almost impossible for competitors to copy, and its long-term prospects that I talk about in this video. I will buy more Apple shares once the Apple stock is below my intrinsic value again. For example, a few months ago when Apple stock was near the bottom here, I calculated Apple's intrinsic value using my intrinsic value calculator. I realized that Apple was undervalued during this time, so I bought more Apple shares near the bottom here. In fact, I already have Apple shares in this portfolio here for many years already. I also have other portfolios that have almost the same stocks and the same investing strategy. All my portfolios are performing very well now, and they're outperforming the S&P 500 because I have invested in some of the best companies that are the best in their industries. For example, if you look at this here, you can see I have invested in Apple, Adobe, Amazon, ASML, Alphabet, MasterCard, Microsoft, Tesla, TSMC, and Visa. In my opinion, I believe these companies are the best businesses in their industries. I invested in them when they were substantially undervalued before. My strategy is to always invest in the best businesses at undervalued prices. Then I like to invest in them for many years so their intrinsic business values can grow substantially over time. For example, once I find an outstanding business like Apple, I like to wait until the stock is traded below its intrinsic business value. The best time to buy is when the market is very fearful. Then I like to keep buying more shares over time. Instead of trading stocks, I like to own shares of outstanding businesses for many years. This way, their intrinsic business values can grow exponentially over time. The risk is also much lower if I pick the best businesses that are undervalued. Now, if I have to make an educated guess, I believe Apple's mixed reality headsets has a much bigger chance to succeed as the next computing platform compared to the MetaQuest headset. This is because Apple already has a very large and loyal iOS user base with over 1.74 billion iPhone users in the world. Some of them will become early adopters to buy Apple's mixed reality headset, even if it's very expensive. More importantly, Apple has a lot more developers making iOS apps compared to developers making MetaQuest apps. Of course, many iOS developers will want to be the first to make apps for Apple's mixed reality headsets. This is one of Apple's biggest competitive advantage, and it cannot be easily copied by Meta or other companies. Now, all these are only my opinions and my analysis based on my research. They are not financial wise. There are always risks associated with investing. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.